Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting the Asian Session Live Market Analysis webinar for this week. So it is today, 16th February, between 5 and 5:30 GMT. I'll try to give the forecast for this particular week, session-wise forecast from 16th to 20th of February, which is a derived forecast using my specific statistical algorithm for the 4 majors and 2 commodity pairs. Then we will try to do the market reading, try to identify with the help of the initial lows and the highs taken around 3:30 GMT to find out where exactly the market is moving and also what sort of moves they are making it initially in order to track it later on during the day. Then we always keep an objective view with regard to any of the forecast or market telling, and we always try to use the trading strategy to defend our equity. So we use the hedging order while the position is making loss. As soon as the position is taken, which will show initial loss because of variation between the bid and the ask, and then we keep the hedge order or the entry stop or the buy stop or the sell stop, and then once the position makes profit, we keep stop at entry and trail the stop in profit making position, and also we trail the take profit order in the profit making position. As a result, we'll be able to preserve the equity, and also we'll try to maximize the profit in profit-making trade so that we will not miss that opportunity. And if the position is closed, then we will review the market again, identify the type of moves, and see what session we are and re-enter into the market. Always we try to give a gap of 30 minutes between the trades so that we'll be able to see that we don't become emotional trader. So in all these exercise, the basic idea is to control our emotions. So once we control our emotions, then we'll be able to do some sensible trade. Because, in the world, without any doubt, that those decisions which are taken while a person is under the control of the emotion happen to be a wrong decision. So any emotional decision invariably become a wrong decision because that decision happens out of fear or out of greed. So when we are under the grip of fear or greed, then invariably you find that we imagine so much and try to take a wrong decision without understanding the difficulties to achieve the task or without understanding what we are trying to do it. So when we happen to take positions after the rise or a buy position after the rise or a sell position after the drop under the influence of emotion, it happens to be a wrong trade because you find after we take the position, the market reverses. That is why we always try to emphasize on the emotional control. And you know that many of the analysts also emphasize with regard to the control of the emotions. But one of the basic strategy by which we can control the emotion is drink adequate water. So once the water is taken, then automatically the water dilutes the blood and also the hormone which is in the blood. As a result, you find you are able to control your emotion and the emotion subsides. Then afterwards, a logical thinking happens. Once the logical thinking happens, you find we do sensible trades. So that is what the basic idea is. Then it becomes an objective trading, and therein you will find whatever be the method, we try to use it in order to determine whether the currencies are to go up or come down, or whether you are going to see the USD weakening move or the USD gaining move. It can be any statistical calculations or a chart study or whatever it is. But ultimately, we have to do the market reading by fine-tuning it, because there are so many ifs and buts in the market. Basically, what happens in the market is we follow the technical, and suddenly they will say there is a fundamental data release which has changed the market perception. Then, when there is a fundamental change, and when all the traders think that it's going to be the USD gaining more all along, then suddenly that market reverses and show the USD weakening move, and they will say it is a overbought or oversold condition. As a result, the market has reversed, which is a technical reversal. So we won't be knowing whether the fundamental is going to influence the market or a technical is going to influence the market at a given time. Even though you may think that the fundamental is going to influence the market because there is going to be a prime data release like non-farm payroll, etc., around a specified time. And then there again, you find the market reacts to that of the non-farm payroll or whatever the data release. And then subsequently, you find technically the market is oversold or overbought. And as a result, they reverse the market. So you find that the traders will not be in a position to calmly take a decision. And whatever the decision we take, we have to quickly execute. And if you fail to execute it quickly, we find we lag behind. Then many people, they jump into that of the running bus or a running train, and later on find that it happens to be a wrong trade. So what is the solution for it? In such a situation, if we take calm decision, the market goes away from us. If we take a quick decision, it happens to be a wrong trade. So what can a trader do? So this is what we have to address. Now let us go into the forecast. I'll give the solution for it at the end. So it is the third week of February. So the market is expected to show the trending move. And we have seen last week the upward trending move. And on Thursday and Friday, they made considerable gain in the case of Euro and GBP. And they are expected to continue it this week also. In that process, you will come across the week beginning false move during the trending time. And today, during the US session, they could make a slide. And then afterwards, they are expected to make the gaining moves in the market. Probably they will create uncertainty by making small slide here and there in order to confuse the traders that the market could come down. And later on, they are expected to gain the levels every day during start of the day and continue to firm up. And that sort of moves are expected till weekend, and up by the Friday, you could come across a very quick rise happening in that Euro and GBP. So this will be the trending move during this particular week. The next week will be the last week of the month of February, 23rd to 27th. As you know that month end and the new month beginning time, they will try to make the monthly trend reversal move. This time again, the monthly trend reversal move will be volatile move, but with an upward bias. So it will appear the market is bearish, but only buy and sell trade opportunities will provide. And when the traders become afraid of doing buy and sell trade, then you find that they tend to do their sell and buy trade after the rise, and they could go in for a short covering. So ultimately keep in mind that when you try to take emotional trades, then we might lose the equity. And in the process, what happens? We lose our confidence. Once we lose our confidence, we become jittery or we become afraid. And that is referred as the market fear. So once the market fear grips in a person, it is extremely difficult for him to earn money from that of the market. Why the market fear comes? Because of the loss-making trades. So that is why you find every trader you ask, whom you know, or over the web, you ask, okay, how exactly you started and where exactly you are now in understanding the market. Everybody will say that, okay, I have followed X and it was going good and suddenly it reversed. And I followed Y, then it was going good and suddenly reversed. I followed Z and again it was going good and reversed. So what you are trying to do, I am trying to find my own method, but still I am confused. So that is what many of the traders continue to say that. And those who are also experts find it is a great challenge in the market to make the predictions and also how to find out the exact move they are going to do it. So in the process, I have developed an algorithm with which I'm able to give the session-wise forecast and also the levels in which the currencies are expected to trade as a range. And this again a statistical estimate. So the error probability continue to remain in any statistical calculations. So there the error component is of a lesser nature when compared to other statistical calculations because I dynamically change the algorithm during different conditions of the market. As a result, you find it becomes more and more accurate or reliable forecast, nothing more than that. But still, I do not want to trust it 100% as an objective person. So we have to necessarily use the trading strategy to limit the risk and maximize the profit. Now coming to that of the range in which the currencies are expected to trade, now we can compare the currencies highs and the lows. Euro could form the low as 1.1350. It has so far formed 1.1389. That is Friday close level. And from there, they started gaining the levels. And it can go up to 1.17 during this week. And GBP formed the low 53.94. They could make a brief downward stop into 53.50 area and then start gaining it to 57 area. At the moment, the high is 44.36. In the case of yen, slowly after going to 120, they are expected to come down to 115 and 114 level, and quickly they will drop USD yen and they change the market sentiment. As a result, you will find everybody will think of USD weakening moves in the market. So that is how they create the market sentiment and act against that of the traders. And this time, the low in the case of USD is 118.53, but subsequently the market they started making further dip 118.38 and staying below this 118.53 for more than 30 minutes. You can understand what they will do. 118.78 is the high. Then in the case of CHF, 92.88 is the low and 93.28 is the high. They are not breached the low or the high, but they are expected to slowly gain. And if you watch carefully, even though when Euro has gained on Friday, they gained the levels in the case of USD CHF as such. As a result, you find Euro CHF has made a considerable gain. And you know that S&B is not going to intervene. That was a story with which they made a huge drop in USD CHF, and for all along they are gaining the levels. So this is what the players do a havoc in the market, and so one has to be very careful in the market. If we try to trade without a hedging, then we might lose our shirt. Then USD CAD 1.2427 they formed, and it's expected to slowly breach 1.24 and breach 1.23. Afterwards, you'll find sudden drops happening in the market in USD CAD, which could come down to that of 1.19 area from that of 1.25. So it went up to 1.2770. From there, it started gaining, losing the levels, and so that was an upward extended stop and in order to make a continuous slide in the market in the case of USD CAD. Then Australian dollar, which is showing range bound moves, 117.58 it has shown. So 0.7758 could be the low and 0.8250 could be the high. Slowly they are expected to gain the levels in the case of Australian dollar, and you'll find then Aussie consistently gain during this course of the market trending. So these are all the levels in which the currencies are expected to make the swings in this week. Now coming to that of the market trading, the second component of our market understanding. The first component is namely the market forecast, which is derived using a specific statistical algorithm, and I have given it here, and that you can follow it as a guiding factor. And later on, we try to do the market reading. This can be done by everybody on their own and understand what sort of moves they are doing it at a given time. Now you find in the case of euro, 1.1389 is the low, 1.1422 is the high. They are not breached the low or the high. They are only making a swing in this narrow range. So wait for them to come closer to high, closer to low, and see what they are doing it for 30 minutes. Then if they make a brief downward stop and try to take a buy, then they will gain the levels. So watch for the moves and then initiate trades. Then in the case of GBP, 1.5394 is the low, 1.5436 is the high, and they are not breached the low or the high. And only in the case of USD Yen, they just breached the low. 118.53 was the initial low. They come down and formed 118.38 as a new low and holding it below that of 118.53. So they are slowly expected to drop. As a result, we'll find that when Euro and GBP are holding, USD Yen is dropping, you'll find Yen crosses continue to make a slide. Then afterwards, they will gain the levels in the case of Euro and GBP as the USD weakening move. So you have to carefully watch and understand what they are trying to do in the case of Yen and Yen crosses, and then try to take positions. Then it will be easy for you to make money from the other market. In the case of CHF, 92.88 is the low, 93.28 is the high. They have not breached the low or the high. So only in the case of Yen, you have seen the action breaching the low. In the case of CAD, the next, they just breached the low by 1 pip and holding that high is not being breached. So they are going to make either way stop-ins in the case of USD CAD to start with and then continue to make the slide. Then in the case of Australian dollar, 77.58 is the low and 77.94 was the high. They just formed 77.95 and made a dip. So they are expected to hold around with a nominal swings. And later on, after the gain in the case of GBP and Euro, they will gain the level in the case of Australian dollar as a commodity pair. So they will be handling today the commodity pairs and the commodity crosses and also the yen crosses to start with, and then slowly they will come to the majors in a big way. So keep in mind that the players are here to create the market sentiment and act against that of the traders. So use always your logistics. When the high is formed, when the high is not breached for more than 30 minutes, we can only sell there, not buy. Similarly, when it comes to low and just made a brief downward stop and or come to low as a false move and not breach the low for 30 minutes, you can do only a buy and sell trade as a logical trade. So that you don't forget about it. So as far as the basic trading strategy is concerned, we note down the initial lows and the highs around 3:30 GMT and try to look into that of the expected market moves. Okay, they are expected to make a firm up and small swing at the higher level. That's what's going to happen during that of the during that of the Japanese session and European session also. They are expected to make a rise. So one can just wait for the market to come closer to low and then try to take a buy position and keep 30 pips hedge order to limit the risk. And once the position makes profit, you keep stop at entry and keep the limit order 45 to 75 pips away from that of the position. And once they start increasing the profit or start rising the level in the case of Euro or GBP, trail the stop in the profit making position, maintaining 15 pips or 18 pips away from that of the market. Thereby you will be able to see that the market either hit your trailing stop or the limit order and your profit is protected. So that way you try to do for every trade, so that the first step in trading is eliminate the risk. Because everybody knows that trading means risky. So the first an intelligent trader has to do is eliminate the risk. Then, so that your hard-earned money is not lost. Then the second part, don't be in a hurry to book profit and try to maximize the profit in a good going. So when the going is good, you try to make good profit. As I told you, from second week, you can do position trade also. So in that position trade, suppose you had taken a buy in the case of euro around 1.1250, then you can simply keep stop at entry and trail the stop in a profit making position, wait for the market to go up further and maximize the profit in a single trade. So that way you should be able to use your common sense and use your strategies to maximize the profit in a profit making position also, so that you don't take much of an exposure in the market. It is not necessary that you have to take huge lot positions in the market in order to earn, or there is no need that you might miss your opportunity and we may not be able to get the level to enter into the market. Nothing like that. Because whether you buy it at 1.1250 or 1.1400, it doesn't make much of a difference as long as you are going to book profit in a trade. So that you need to understand. So you require 30 pips or 50 pips profit in a swing trade. And there, again, every day, near that of the low, we can enter so that we'll be able to book profit after the rise. So you should not think that just because euro has gained about 200 pips, so we have to do sell and buy trade. So that gives a wrong approach in trading. So always find out the daily lows and the highs and try to find how they are making moves near that of the low, near that of the high. When they are in the middle level, don't commit positions because that is not going to give you any sort of leverage or any sort of benefit. So always wait for the early and the late sessions and then try to commit positions. So their timings are also given here, and always the early and the late sessions give you great opportunity of trading. Mid sessions they handle the crosses. At that time you have to patiently wait for the mid sessions to get over, and again during the late session you can commit position. The best way of doing is commit position during the early session and close it during that of the late session as a session wise trade, and that will give you consistent profit. So I take this opportunity to thank FX Street for the facilities provided, and also you people who have come here to listen to my webinar. And let me answer to the questions which are asked here now. If you've got any doubt, kindly ask your questions in chat window and also the question answer window. I'll be willing to answer to those questions. Mohan Kumar has got a question. In Indian commodity market, how we take initial lows and the highs? So as far as the commodity market in India is concerned, it starts in a different timing from that of the international timings. So when the Hong Kong market is open, it is not showing. So basically you come across once the market starts around 10:30 or 10, then they make about 1 hour quick upward and the downward move. After that, you can take the initial lows and the highs. Oren, can we sell yen as technical trade? Yes, you can. You watch till late session. If it is not going above that of the initial low, or kindly if it is making a brief upward stop and above that of the initial low and reverse, at the time take a sell, you'll be able to really make profit. Then do you think that GBP pair will ever drop? GBP is also expected to make the slide, but not in a big way, but at least for 50-60 pips. And that is why they will try to make a contrarian move by holding euro and GBP and making a drop in the case of USDN, and also make a small dip during session change time in the case of euro and GBP. At that time, you'll find a downward stop and happens in the case of yen, GBP. At the time you try to take a buy, you will be able to benefit out of that. Then blacksmith, we take position in the early session and it is 30 pips loss. Then is it wise to close late session with 30 pips loss? See, once you take a position during the early session and the late session it shows 30 pips loss, that means your position is hedged. And see whether the hedging is making profit or not for 30 minutes once it is hedged. If it is not making profit, that means during the late session stop and you are hedged, and then subsequently they intend to make an upward move. So you try to close the hedging and keep another hedging order 30 pips below. And once they start gaining the level, you try to trail up the hedging order until you are able to keep stop at entry. Then next session you can book profit. It's not necessary that all the time you have to do session-wise trade. You can do the intraday trade. Take during that of the Japanese session low, and if they are making an intentional move on the upside, then wait for the move to get completed during the US session and book profit. Otherwise, you can do a position trade of holding the position for about 2-3 weeks and then maximize the profit also. There are various types of trades. So it all depends. Only a profit-making position, you try to hold it for a long time, not the loss-making position. That is not greatness. That is not trading strategy at all. Then Shan has got a question. Since Australian dollar is lagging in the rally as compared to that of euro and GBP, does that mean that there is still some time before one should take positions? Yeah, they will make the week beginning false move to start with, and then you'll come across the gaining moves in the case of euro and GBP. Today being the week beginning, they will try to induce the traders to take buy position by breaching the technical resistance, and once the traders take buy position, they will make a dip and drop and hit the stops of such buyers and then continue to gain later on. So they have to necessarily give the wrong signals to that of the traders, either using technical or using fundamental. And once the traders commit wrong positions, then only the players will be able to make their intentional move. But the forecast gives ahead that they will make the intentional move on the upside in the case of euro and GBP. That is why the dips we consider as great buy opportunities. If hedging is profit, then what can I do? When the hedging is making profit, blacksmith, you can keep stop at entry in the hedge and until such time the hedging is closed. Or once they form the new low and the new low is not been breached for more than 30 minutes, then you book profit in the hedge and keep another hedge order below that. Then they will start making the rise. See, you would have been hedged during that of the extended move on the downside or a stop point. And if it is a stop point, then the hedge will be making loss. If it is an extended move, then the hedging will be making profit for 2 hours. At that time, you try to book profit in the hedge. Keep another hedge order below that, 15, 20 pips or 30 pips. And once they start gaining the level, you move the hedging order on the upside till you are able to keep stop at entry in your entry. Then afterwards, book profit on the buy side also. In Karthik Rajan, can we expect any big drop in Euro USD, GBP, Australian dollar? No, sir. No big drop is expected this time. Next week, they could do it as an extended downward stop before making a rise. There is a previous low, not at all, so not at all anticipated at that moment. See, the players do it once the traders predominantly turn long and nobody is willing to sell after the rise. No, because they gain the levels, nobody is willing to sell and all are turning long. Then they will try to make a downward stop before making an upward move. But during the monthly trend reversal, sometimes they make one quick downward stop and like an extended stop, and they had done it in the case of CHF. How they had gone deeper and then simply reversed it. That sort of moves they could do it during month end time, not during that of the trending time. Any other questions, sir? Okay, then I'll just show the forecast again. So they are expected to make the big beginning false move during the US session, a small slide, and also start of the tomorrow during Japanese session, and then start gaining the levels later on in the week. And small swings will be there, downward stop, and they could do it or react to that of some of the data release time. Ultimately, they are expected to gain more levels in the case of Euro and GBP. And USD CHF, they are expected USD they are expected to make a drop, and CHF they are expected to make the sideways move and then gain the levels as well. Next week we will come across the month end volatile moves, the trend reversal move. Then with regard to the levels, they are expected to make the lower level consolidation with a rise in the case of Euro and GBP, and also the lower level consolidation they will try to make, and later on they will go above that of the high 122 they have shown it, and in the case of CHF slowly they will gain level to 95, 96, 97 and things like that. Along with that of Euro, they are expected to gain the levels in the case of USD CHF also. Then in the case of Canadian dollar, they are expected to make one-sided drop, like the one-sided gain, they have done it. Australian dollar, they are expected to make the swing and rise moves. So these are all the initial lows and the highs. So in the case of yen, they have reached the low, set and still holding below that. Others, not much of a significant move is seen. Question. And Ini has got a question. May you please comment on New Zealand dollar? New Zealand dollar is also expected to swing and gain level along with that of Australian dollar. Then when is it good to buy Euro and GBP? Euro and GBP you can take a buy during that of the late Japanese or the start of the European session, and then book profit during the end of US session, or end of European or early part of US session. And again tomorrow you just buy after the swing and slide move during that of the Japanese session. So I'll come back on 19th February, Thursday, and try to review the forecast, what I have given it, and see whether the market is moving in tandem with the expected market moves or against, so that objectively we will review and try to understand and see that we are able to consistently make profit in our trades. So I take this opportunity to thank FX Trade and also you people for all the support. Thank you. Wish you all happy trading. See you on Thursday.